What's up guys, and welcome to WSM Research. Before we get into the video, please note that we are not financial advisors and this video is for informational purposes only. Make sure to do your own research before making any investment decision. As you all are probably aware, as of today, March 5th, 2021, we are in the midst of a tech-driven sell-off. The reason for this sell-off is likely largely due to the fact that interest rates have ticked higher and expected by some to continue going higher in the future. If this does happen, then that makes the value of future earnings go down. Many tech stocks that trade at high multiples are valued based on earnings in the far future, so that's why they are getting hit the hardest. The tech-heavy QQQ ETF is down about 12% from its high early in February, while the S&P is only down about 5%. Although these losses may seem painful in the short term, if you zoom out the chart, you can see that this sell-off is not out of the ordinary in the long term. In fact, many celebrated investors will see this as a buying opportunity. But as with any reshuffling of capital in the markets, there are going to be some names that will benefit more than others. Today we're going to be talking about one stock that's been especially hard hit by the recent sell-off, despite strong fundamentals and good prospects for the future. This stock has taken a beating in the past month and is now down about 43% from its recent highs. The stock we're talking about is Corsair Gaming, ticker symbol CRSR. Corsair is a company that makes gaming peripherals, which means all the devices that gamers need, from keyboards and headphones to light strips and cooling fans. Although they don't directly produce video games or gaming hardware, they are still highly tied to the gaming industry. The gaming industry is one of the most exciting industries today, with explosive growth and incredibly strong prospects for the future. In the past 20 years, gaming as an industry has grown exponentially with consoles like the PlayStation and Xbox, as well as a plethora of PC games such as the extremely popular League of Legends. These games have captivated a wide swath of the younger generations like never before, and as these generations replace the current boomers and are themselves replaced with new generations that also play video games, the entire industry will grow until people of all ages are consumers. Because of all the secular tailwinds around the gaming industry, the entire industry enjoys premium multiples from the stock market. For example, Activision Blizzard, the maker of Call of Duty, made about $3.21 of profit last year on an adjusted basis per share, which gives it about a 29 times price to earnings multiple. And that's even with a 50% year-over-year increase in earnings due to the pandemic. During normal times, the valuation would be even more extreme. On the other hand, Corsair Gaming last year made an adjusted $1.60 per share, giving it an adjusted price to earnings of only 18 times earnings. That's despite the fact that Activision is less diversified since it is heavily dependent on the continued success of only a few games like Call of Duty. Corsair, by contrast, will do well as long as gaming in general is strong and people buy gaming peripherals, regardless of what particular game they are playing. Despite the incredible earnings growth of Corsair, it is fairly heavily shorted. As of February 12th, the short interest was 5.5 million shares. There were 90 million diluted shares outstanding as of last September, but only 13 million were sold to the public in their IPO. An additional 1.135 million shares were then sold as options that were exercised by the underwriters of the IPO. It is unknown if there is any other stock that may have been sold publicly, but it still holds that 5.5 million shares sold short is a significant number. Short sellers are likely bearish on Corsair because they believe that their strong results are the product of a pull forward of business during the pandemic, and after the pandemic is over, their business will go back to a slower rate. However, Corsair's growth is actually highly linked to the secular trends around gaming, and they have been growing quickly even before the pandemic. So let's take a closer look at Corsair's fundamentals. Starting with their revenue growth, what you want to see is strong growth that is ideally accelerating but at the same time not an anomaly, and broad-based across all categories. Corsair grew revenue massively in 2020 in both their gaming peripherals business and their gaming components and systems business, which includes things like cooling fans for processor chips. Their growth accelerated in 2020 to 55%, but was also strong before 2020 with 17% revenue growth in 2019. The revenue growth was also broad-based, with 45% growth in gaming components and 83% in peripherals. This is extremely good to see because it shows that the growth is a common theme throughout time and throughout both of their major business areas. That makes it more likely that they will be able to continue to grow into the future. But revenue growth is only as good as the profits that can be made off of it. It turns out that as their business has scaled, their profit margin has also expanded, from 21% to 27%. This margin growth is similarly constant through both time and category, with margins expanding through 2018 and across both gaming components and gaming peripherals. They also have an incredibly low amount of debt for this level of growth. They only have $200 million of net debt, which is less than their 2020 earnings before interest, taxes, depreciation, and amortization. Once this debt is paid off, the reduction in interest expense will only increase their free cash flow. Based on their fundamentals and current earnings, Corsair might be the perfect way to get tech and gaming exposure in your portfolio, while taking advantage of the tech sell-off. They are growing massively, will benefit from long-term societal shifts around gaming, and actually have real earnings. They are also one of the cheapest tech stocks and gaming stocks on the market today based on classic valuation metrics. What do you guys think about the prospects of Corsair Gaming? How are you going to play the tech sell-off? Let us know in the comments section below. If you liked this analysis, leave a like and subscribe for future updates. In the meantime, thank you so much for watching and we'll see you in the next video. WSM Research, signing out.